Good afternoon, everyone. Welcome back to Short Verticals. Brett Crowther, and goodness gracious, the markets have been crashing this morning, coming down hard. And what is that doing to the trades that we put on a few weeks ago? We have these trades. We have a trade left that's 1 day till expiration. How does that impact a 1 day till expiration? There are some things we need to know about it. We need to understand how to manage these trades, the impacts it can have, and some areas that you may not have thought about that the probabilities may not play out like you think. So we're going to get into that. So it's good to be back with you, though. Sorry I missed it last week. I was out on vacation. Good to be back this week. Unfortunately, we won't be back next week as we will be gone for Thanksgiving, right? So hopefully no one will be here. But I'm glad we have this week. So let's get into it. Let me cover a couple of disclosures that we need to cover at the beginning. So do remember that options do carry a high level of risk, not suitable for all investors. The information here is for educational, illustrative purposes only. Paper money application, again, is also for educational purposes only. Short options can be assigned at any time, regardless of the in or at or out of the money situation. Investing does involve risk. Past performance may not be, or is no guarantee of future performance. And then we do have some option Greek risks in there. Also, we don't usually use a stop loss in here, but if we did, do remember that stop losses are not guaranteed. They can get filled at different prices than set. So with that, I do want to talk about this market, what's going to happen. So what we'll do is we'll get into some trade management. Let's talk about that right off the bat. Let's cover what happened to some. We've had 3 trades since we last met. 2 of them have been filled. 1 of them has been sitting out there and has been killing me waiting to talk to you guys about it because it's been up, it's been down. I've watched profits climb and drop like mad. So look at that one. And then I do want to talk about the overall market, where it's going. And then also, if we have time, I want to see if we can get into some risk profiles. I saw this in the surveys that we put out there. So a couple of you asked about a little bit more information on the risk profile, which does pertain to a lot of things we do in this class. And so we'll cover that. I do want to cover some other potential trades that we'll look to put on. Hopefully they're still setting up. I mean, I've been prepping for the last 2 hours, and it's like every half hour I had to go back and check and see if these things were still, in place. And some things weren't. Some things had to change because the market's been changing quickly. And then finally, I'll leave you with some homework at the very end, some things to watch until we meet again, okay? So let's dive right into it. Wow, looking at all the good people. Good to see you all in the chat there, having you back with me. It's good to be back. Okay, so let's do this. The first thing I want to talk about is the trade that we put on, November, well, let's look. It's Apple. So we put on this trade, and it looks like, boy, let me zoom in on this so we can get the full picture. There we go. So we put on a trade on Apple back on 11/6. And so right here is where we put it on. And that day, it was actually up higher, and it closed down a little bit lower by the end of the day. And so, it really wasn't the bounce that we were hoping for. Again, that's one of the challenges of teaching a class at, noon my time, noon Mountain Time, that, we still have a couple hours before the market closes, and what can happen between now and then, can change, right? And so, but it's for educational purposes, so we want to take the position and see how it plays out. Well, it ran up to the old high, it bounced off that and started pulling back a little bit. And this is what's interesting, is I watched the position grow and then I watched it drop, and then this morning Apple opened up quite a bit and has dropped since then. Now, let's take a look at, and I got to show you something else too. Let's take a look at where it's at right now. We are down $17, $20 from the opening. Now, here's what's frustrating about this position is, let me go back to the chart. Let me go intraday, and I'll show you what I was looking at. And it's just, I was just so anxious. I was like waiting for this class because I wanted to close out this position that we have together so badly. But I really wanted to wait to do it as a class because I think it's better as a teaching example, right? Well, in the meantime, as I'm waiting, let me show you this 5 day, 5 minute. Look at this. So here's the market open and it ran up. Now, this point, when it's up here, our position has a max gain of about $300. The position itself is about $255 in the positive, right? And I watched it kind of slowly fade away, fade away, fade away, fade away, fade away, fade away, fade away until I got down here about an hour ago, and I thought that's where it hit like break even, right? We're back to zero. And I thought, oh, shoot, I hope it can rally. And it did. But then in the last little bit that we've been talking, down it went again. It's like I can't buy a break on this one to show you, to wait and illustrate this point about what's going on with these trades and looking to close it out together. I was really hoping to take a trade. But this brings up some really, really important thoughts, right? Really about managing the trade, because this went from almost max gain to a negative position in a matter of hours. And this is interesting because this, I think, what did we sell? The 265? I think we sold the 265 on that, bought the 260. This position at one point was $15 or $10 out of the money with 1 day till expiration. And when I was looking at that, the delta on our position was like in the 20s. And so if you look at the delta and you use that as kind of a gauge for approximate probabilities, right? And we're thinking, okay, if it's in the 20s, that's 80% chance theoretically that it'll play out. Well, you know what? That's not entirely true, and I want to walk through the reasoning behind that. But let's take care of this position. So we're down 1750. Let's go ahead and close this out because, and again, this is just killing me. I'm going to actually do this. I'm going to buy that back, and we're going to put in this order to buy that. Let's see, that's not it. That's not our single trade. Hold on a second. Let me make sure I got that right. Go back to trade spot. Got a trade here. Yeah, got it all there. Actually, before I do that, I want to leave it on here for just a second because I want to illustrate something else. Now, this is interesting because I want to contrast and compare something that we could say this went wrong, but didn't go all wrong. Let me actually show you something that is important to note. So, we put in the position back here on November the 6th. And since then, what has it done? Well, it's pretty much really hasn't done what we anticipated. We were wrong, right? We got in here and we expected to go up. But what did it do? It actually came down. So from the time we got in, it went against us. Now, what's been working for us? Well, time has worked for us, but the direction was wrong. It went in the completely wrong direction. And so when we look at that, and we look at where the position is itself, I mean, we're really not in that bad of a position, down $27 after, it didn't work out. It didn't play the game that we wanted to play. And so what I want to do is actually go over to the ThinkBack. Now, I don't know if this is on all paper money platforms or just mine has been enhanced, but it's on live accounts. But the ThinkBack allows us to go back and look at what prices were, kind of a way back machine, right? And if we go back in here, so I have Apple up here. If we change the date to November 6th, and that's when we place this trade, it should have, I left those on because it should have our positions. How come it doesn't show our positions here? Anyhow, so this is the day, this is when we got in. And what I want to say is that we sold the 265, we bought the 260, right? Well, here's what I want to contrast that with. Now, we're basically break even down a little bit on this trade. Again, I could have almost taken, 75% of the gain a few hours ago. But let's look at this. Look at this. If we were to buy the call would have cost about $8.42 at that time. And this is kind of the good and bad about kind of a long position versus a short vertical that we played. So the 842 is what it would have been worth then. Well, what is that worth now? What is that worth now? Well, actually that position now is, let's fast forward and you could go through, each day. Whoops, let me get off that little marker there, each day and see kind of how that position changes. But I'm just going to speed that up. So we have a lot to cover. And today that 842, that 265 is now worth about what, 335. And so, roughly about a $5 loss on that position. So a pretty significant loss, about a $500 loss per every one contract. We have what, 5 contracts on this position? On the position we have now? On the vertical? Yeah, 5 contracts, and we're down $35. Okay. So kind of compare and contrast that. Now, what's the flip side of that? We didn't lose as much, even though it went against us. We didn't lose nearly as much as what would have happened had we bought the long call. But on the flip side, if it went directional, if it had gone up, the long call could have made a lot more where we were capped. So there's pros and cons. But I just wanted to illustrate that in this situation, this kind of is a good example of how those short verticals can be a buffer, where it doesn't have that great upside potential. It can be a buffer when things don't play out. So we were wrong about direction, but we were, right with time, and we weren't that wrong. Let's go ahead and close out this position though. And let's go ahead and do create closing order. Apple, that back. Or even live money, like to see if we can squeak out with a little bit less on that. So I'm gonna go ahead and send that off. Probably get filled on that. Let's see. Everybody, if not, we'll let it just sit there and stew for a minute. But I just think it's very important to understand just kind of the pros and cons with that. Now, let me actually go through something else too. I think is very valuable to understand. Which I don't know how many of you have. I see a couple of you say, "Hey, you got out of there with a max gain if you traded Apple." Yeah, nice, or close to 80%. Oh, nice. Looks like a lot of you took advantage of it when you could. All right. Well, so here's something that's interesting. I wanted to stress this probability idea, right? So if we were to come in and look at right now, where are we at? The 265. Again, where is our position? That's so weird. I mean, we had that position there. Oh, oops. Hold on. Do I have the November 21? Yeah, it's down there. We're going to buy it back. Okay, we're good. Here's the buy, sell. Okay. So this is what I want to share with you is if we look at this 265, right, that's the price that we need it to be above. And if we're going to go in and look at the delta and kind of using that delta as that, idea of approximation for probabilities, this morning earlier when it was up around 275, this is down quite a bit lower. This is down about 20, right? So really, like I said before, it would give the impression that this position is safe. 1 day till expiration, a delta of 20, right? That sounds like a pretty solid spot, one that you don't have to worry about. And this leads into the idea of, do you close out a position? Do we close out of a position prior to expiration, and try to, take our whatever gains or losses we have, or do we wait and let it try to expire worthless, And there's still a toss up, but this is one that felt comfortable, but was it really? And what can happen here, this is what's interesting. Let's just kind of talk about this as a single option, if you will. So if we're talking about, what kind of, how much this would lose, we kind of think about this as like, okay, the delta is 37. So for every dollar that the stock moves, that position would lose 37, cents, right? But it's not like that. It actually changes a lot more than that. What happens is when you get close to expiration, those deltas can seem kind of small, and this morning, like I said, it was 20. And so you think, okay, what if it even moved, $5? If it moves 20 cents for $5, it'd be like a dollar, loss type thing on a single position. But that delta changes dramatically. The gamma starts getting really big, and this is what they call gamma risk. I don't know how many of you are familiar with that, the gamma risk. Let me know. But what happens when you get close to expiration is that especially when you get close that at the money strike price, that when the option goes into expiration, the gamma for anything in the money needs to go to 1. Anything out of the money needs to go to 0 right at expiration, right? Because there's nothing left. It's either out or it's in the money. And so what happens is those deltas that are close to at the money need to change dramatically. If they're $1 in and then they go $1 out, it needs to go from a high number to a low number very quickly. And so this gamma can explode running into expiration. And so the first dollar is 37 cents, but then you add the gamma, the next one would be 42, the next one 49, next one, what is it, 49, 56 and 63. All of a sudden, it moves $5 or so, and it's almost doubled the size of the impact that it had. And so that's gamma risk. And if you look down here, this is only for this one that expires tomorrow. If I look at the December expirations, When we look here, the gammas are much, much smaller, right? 2 cents, 1 cent, very small. They're not anything like this, and these will continue to grow as we get closer to expiration. So that is something very important to understand, the impact that it can have. And again, you think you're safe, you think you're fine, and then lo and behold, you're like, what happened? What happened there, right? Just like our Apple trade here, looking to, is that not going to bounce? I was hoping at some point that would just give a little bit of a bounce and we'd be okay. But for whatever reason, doesn't want to bounce. Today it started off good. It's kind of like what happened. I woke up, was going to have a good day, right? The big news was Nvidia. Nvidia came out with its earnings report. That was positive. Market started positive. We had the jobs data come in, right? The jobs data delayed from September came in at 4.4%, which is, a little bit better than they expected. I think they created 118,000 jobs. And so the jobs data was actually looking good. And so, gosh, we started off the day feeling kind of good. And then to have it kind of all sour was not fun. But anyhow, so there's just a couple things there. Just like you can use that think back to go back and look at things. Beware the gamma risk. This is where we talk about, hey, when you get close to expiration, it's just, generally speaking, it's a good idea to pull those off the table, whether you're out of the money or at the money. Unless it's way out of the money, you may rethink it. But this one, we felt pretty good until we didn't. Right? Okay. All right. Let's also look at some of the other trades that we had that since we last spoke, and we also had one on Meta. And so, if you remember on Meta, what we did on this one is we looked to do a gap down, and I wanted to put a bull put spread on, but it was up much higher, and I wanted to sell it for $5, but during the day it dropped down. We got only like $3 out of it, $3 and change or so. So it wasn't quite as good, but we still took the trade anyway. It came down. It looked like it was going to hold support, and we're expecting it to bounce and rally back up from there. Well, I can't remember if I was out or I missed these days or whatever, but I came back and I think I missed this one, and I saw it right here. I thought, oh, wow. Okay, well, it's back up above. Otherwise, I should have exited there, but it didn't. And so when I saw it back above, I thought, let's wait, give it another day or two, see if it does continue to climb. Next day it was right at support, and then the next day it dropped down. And so that was a clear break of support, or kind of a bounce off support even. And so I exited the trade right there. And so it was about 1060 we exited for. So bought it for 385, exited for 1060 or thereabouts. I think it was close to that. And so it's we only had one contract, and so it was about a $600 loss on that one. Again, one that didn't go our direction, anticipating that bounce, but that can happen, right? And then one more that we had, BA. BA was a little different situation, where this one we're looking at the stock coming down, kind of bouncing off the support level, going, let's get an angle arrow here, bouncing, and then this time it broke, right? We got in and somewhere about here, if I recall, during the day, where we sold 5 contracts as a broke support, anticipating it to drop on down. Well, this one, oh, there goes our Apple. Okay, got it filled. Oh, I'm telling you, that one kind of hurt. I just sat there. I'm sorry. I just sat there all morning though. For the last 2 hours, I've been sitting there watching it, thinking, why can't we teach class now? Why can't we teach class now? As I just deteriorated, right? And just watched the profits melt away. So yeah, if I'm a little bit hot about it, you can understand why. That's just the way that trade played out. And that's trading, right? On the inverse, I mean, this one worked out, right? This one we again sold there. I bought it back there when it was down at 10 cents, and so we were above that 80%, or just a point where the value was getting really low. Now this is one where it could be looked at a little bit differently. We talk about managing those positions, getting out. Well, had for whatever reason we still been in this one. This one, we could have probably let that one ride and not exit the trade, let them both expire worthless, because then you start looking at the probabilities of it getting way back up here, you're getting really, really low. And so this is one that, possibly could be there. But typically speaking, what happens is you don't usually get to that point before you decide, what, let's pull this off the table. So that's the way it goes sometimes. But anyhow, it's really good, I think, for everyone to see the good and the bad, how to manage a trade, how they play out. just how it impacts, because it's, you know, it's like they don't always work out the same. No two are the same. All right, let's do this. So I covered Apple, I covered our positions, and so now we're out of all our positions. I actually, before I want to go into risk profile, I want to make sure we have time to go into some positions. And so let me just make sure I'm not missing anything in the chats in there. I don't think so. Let's see. No, I think we're good. Trading shorts against the SPX. Welcome here. Yeah, we could trade against the SPX. I don't have any setup to do, but yes, we could. Just answering that one. But I think thank you, Rachel, for covering the rest of the questions. So we're good. Okay, let's do this. Let's take a look at some stocks out there. Now, this is interesting when you have the market dropping down like it did. Let's go out and take a look at the overall market. In fact, let's pull up the SPX. I know a lot of coaches will do this at the very beginning, but I wanted to get through that Apple. And so, you know, the SPX has been on a nice move up, pull back, run 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 up, pull back. A little bit heavier pullback here, run up, pull back. But this time we're seeing kind of almost a double pullback, and it's a little bit stronger pullback than we saw before. And, you know, this one has actually, let's go ahead and activate this. Let's draw this a little bit lower. That's where that low was right there. So this one has pulled back to the low that we saw on October 10th, right? Again, the market opened up strong this morning, but dropped down. So this is what's interesting, is it's such a huge candle, but the fact that it gapped up, the overall percentage down isn't as great as you know it might appear from a big candle. So this is what's going to be interesting to see, is will this hold? Will this support level? What are we at? 65.48. Will that hold, or will that break? I mean, it still has bearish momentum. We look down at the MACD, that's still declining, right? Just curious to see, if I want to go back, how much further back that goes. Is this one of the deeper ones? No. Now this is interesting. This is an area that, actually, let me draw it with a straight line here. If I come down and look at the MACD, the MACD is a momentum indicator, right? But sometimes what I like to do is throw on almost like a support resistance to get a gauge as to how strong of a bearish move this is. Like, what extent has it run? And as we can see, this is similar to what it saw back in last December, somewhere in here, what it saw in February, March. Now, it did go a lot further beyond that in April, but generally speaking, these are some more extreme movements. You know, a lot of the other ones are kind of in this ballpark, right, where it dips down. And so I bring this up to point out how one might look at this and think, okay, you know, how extreme is this move? How strong of the downward pressure has it been? And we see it is actually matching some of the other ones where that got to the point where it could possibly turn around. And so, you know, this is what's going to be interesting to keep an eye on, to see, okay, well, the price action is back down to support. The indicators are back down to, at least the MACD is back down to a level where historically it tended to turn around, you know, 2 out of 3 times. So, you know, is this a spot where it could hold? That's what we're going to keep an eye on and see at the end of the day. Will that hold or not? If this spot doesn't hold, then it opens up some more downward pressure, probably down to, this would be the next major support level right about here. We're looking at what, 61.33. So it opens the door for a little bit more downward action on that. But again, you know, it's not there until it's there, right? It hasn't broken yet. We're just hypothetically, what could happen if it breaks this, or what if it bounces and goes up. All right, so with that in mind, typically speaking, you know, it's good to look at positions or entering positions that tend to go with the general flow. It's a lot easier if you know the market's going up to find bullish trades, and it's a lot easier if the market's going down to find bearish trades, and just use that as a push. You know, I don't know how many of you guys have tried that, have, like, you know, taken bearish trades in bullish markets and bullish trades in bearish markets. And while they're out there, generally speaking, I think if you've traded long enough, you've probably found that it's easier to find them, and they tend to have a little bit more of a tailwind when the overall market's going in that direction too, right? Sometimes the runs can be quicker, the runs can be further. It just tends to play out a little bit more like that. Again, you know, nothing is set in stone, but just general ideas. I mean, you know, it just reminds me of, I do a lot of cycling, and it's always nice to have a tailwind. even if you're in a Peloton, it's nice to have a tailwind, right? So with that said, generally speaking, we could look for bearish trades. Now, let's see what we have today. Actually, I want to look at Target, TGT. So let's pull up Target. So what we see with Target is you can probably see, Target last year dropped down, rallied up, dropped down, rallied up, and it looks like it's dropping down again. And right now it's kind of broken through a support level that's been around for a bit. There's major support back there, and it's kind of in that ballpark area, right? So down in here somewhere, and you can see all the times that settled in there, tried to break through it there, but just maybe a little bit of a tap or a little bit above it there. But now today is breaking through it. So this is a breakout play, right? Breaking down. And I would like to actually see the market breaking through support at the same time. That would give us more of a tailwind. Not there, but what we are seeing on the stock itself is that break of support. And so with that, how about we go out and look and see what we can do here? Hopefully the numbers still play out. Again, I have a scratch pad here. I've crossed out like 5 trades already looking for others because either it ran too fast or, just something else happened to it and it's not there anymore. But let's see what Target offers us. So it's currently trading around an 84. We have, maybe this is a little bit high. Let's pull this down, this support resistance. I really had it out there a ways when I did it before. So, kind of more in this ballpark. The more recent it is, the more weight you can put on an area of support. You know what I mean? Like, meaning if it bounced off something a month ago, that tends to be more impactful or more significant than if it bounced off that area a year ago, right? Because we tend to have our memory, tends to remember stuff that's more recent, becomes more relevant. So we're going to put it right there. So what are we at here? We have 85, 86, somewhere in there, somewhere in this ballpark. It'd be nice to I wonder if we're going to have to go below that. Let's go see what the numbers allow on that. So we're going to go over to Trade tab. I'm going to bring up Target. And looking at the dates that we have, obviously November is about done, right? It's about cooked. December, we have December 19th, so about a week before Christmas, and there's 29 days. That might get us what we need. A little bit on the short side, sometimes about 30, 35 is kind of a sweet spot. And so, but let's see if we can get enough value out of these to make it work. So if we're doing, what was the number there? We said it was around 84, 85. I apologize. Let me go back and check it again. It's 85 to 86. Somewhere in there was our resistance. So we're going to look to see if it'll stay below that. Again, I'd like to wait till the end of the day to see if that's where it officially closes. Does it officially break support? It could come back up, but we're going to assume that it will close below that. Well, we don't have a lot of options here, right? We got 80, 85, 90. So while it'd be nice to do something like an 86 or an 87, we don't have that. So you have to decide, okay, will 85 work? Well, it's in this ballpark. We do have this as kind of a resistance area, just general area. And so if it comes back and bounces off this area, then we'd still be fine. If our projection is right and it does go down, then we would be fine. At least we have something here to help hold it down. That's the whole point, right? So let's go over and see how this plays out. Do we get enough value in it? So let's go ahead and sell the 85, and then we're going to buy the 90. So I'm going to hold down my control button. I'm going to click on the ask of the 90, and let's see what that gives us. Now it gives us a $1.82 credit. So I wonder, let me put that $1.80 just to make our math a little bit easier. So $1.80 credit. And if we're looking at $5, this is five wide spread, right? So $5, I'm just going to do 500 minus the 180. That's going to give us the risk on the trade of 320. So 320, and we're looking about, 180 divided by the 320. Get that in there. What are we looking at? It's about 56%. So it's a little bit beefy for a lot of the vertical spreads that we often talk about. But why is it beefy? Well, it's beefy because we're actually selecting something that's a little bit more. Look at the delta on that, 48. So it's almost like this 50-50 according to a probability standpoint, right? Where it's not, set in stone, like, oh, well, nothing's set in stone. I shouldn't say that. But it's not, it's not, something like a 13 delta where the probabilities feel a lot more comfortable, right? This is one where it's just kind of, well, it could go according to probabilities. Now, understand there's two ways to approach this. Some people look solely at the delta or theoretical, probabilities, something like that. Other people look at technical analysis and use that. We're trying to blend the two together and say, okay, well, let's look at some of the deltas, get that as kind of a gauge here. But let's also have some technical analysis, see if we can get some love, get some assistance from that. And so let's do that. Let's go ahead with this trade, since we do have that resistance right above or right around this 85 area. And so we're basically just selling at the money, just looking for it to drop, right? With that, what was the risk on that? We said 320. So we placed $1,000 worth of risk on each trade. So let's do it with this one as well. So 320 is going to go into that. You can probably figure that out 3 times. So we're going to do 3 contracts on this and let that go. So confirm the send. 540 is our max profit. 960 is our max loss. We're going to go ahead and send that order. And it'll probably fill. Surprised if that doesn't. And we'll put a note in here that we sold the 85.90. Let's put the date as well. What's the date today? November 20th, right? November 20th. Sold. We'll do 3 contracts. Contracts 85.90 for $1.80. I think it's always valuable to just, for me at least, I like to just have it right there so I can see it on the chart. I'm going to also draw a circle around kind of where we got in on that. Ooh, let's see if they're going to let me do that. Let me move this out of the way. Got too many things crowding up the area. There we go. So there we go. Now it'll drop. There we go. So that's the area we got in. We have our 3 contracts, $1.80. Let's see, how that one plays out. Now, here's the thing. This one, we're not going to be able to be together again till December, sometime in December 4th or something like that, right? So I'll have to keep an eye on this and then, look to possibly manage it. If it breaks back above this, I'll look to exit that position if we get a solid break above resistance. And then, of course, if it drops down real hard, and we get into what's kind of generally speaking, if we get $1.80 times 20%, 0.2. I think if it gets down around 36 cents, I'll probably look to close that position out if that does come to pass. So we'll wait and see on that one. Now, let me bring up another one that this is kind of going the opposite direction. So, this is what's interesting is, generally speaking, yeah, it's nice to have that tailwind. This is one that even with the down day, and we've seen all these stocks drop hard, RTX is still holding up above a resistance, support area, right? It gapped up looks like on the earnings, gapped up to the old high. And so this was a resistance. And that gap actually creates an area of support resistance as well. So that was a spot that just kind of now is held, and it hasn't been able to break back down above that as it's been bouncing around. Now it looks like it does have a dividend coming up 68 cents. But let's check this one out, because this has a support right around 171, maybe 171.50-ish, somewhere in that ballpark, right? And so let's see. It'd be nice to see the MACD starting to roll back up a little bit. It'd be nice to see that a little bit more. But again, we'll have to see where it ends on the day. But let's go ahead and place a trade on this one. We'll do a bullish trade this time, because even though it's down, in all this strong bearish movement to downside today, this one's still been holding up there against some pretty solid support. So let's go over to trade tab. And again, let's look at that same kind of time window of December 29th. And this time we're going to do a bull put spread, or long put spread, or short put spread. But what do we say? 171. So if we go right below that, we're going to be at 170. This one's going to give us a delta of 36. And so, it's kind of a little bit more in the ballpark of what we typically look, between like 20 to 40, somewhere in there. So 36, kind of confirms, okay, yeah, the probabilities are a little more on our side, right? So let's go ahead and sell that one. And then we're also going to buy the 175 and see how that plays out. Well, what am I doing? I'm doing that wrong. Hold on. Did that backwards. We Did I hit the right ones? Nope. Let's do the, I'm selling the one. Oh, I know what I did. Oh, we should again. I'm selling the 175, buying the 170. I think I hit the 180 before, right? Okay. 175, 170. There we go. Got that together for the 215 credit. 217. We can get something like that because at 217 now, 5 wide. So 5, we'll put $5 minus the 2, we'll do just 215, generally speaking. So 285 in risk, 215 in possible gain. And if we look at the risk on reward to the 215 divided by, I don't need to put a decimal in there. I don't know why I did it this time. We can figure out this. It's about the same. Wait a second, I did that wrong. 215, 285. No, it's about 75, isn't it? Yeah. So this one's kind of interesting because it has a lower delta than the other one, but it actually has some pretty good credit for where it is. And sometimes, depending on the strike prices, depending how much volatility is kind of placed in there, it can keep them beefier. And sometimes it depends on how it sits with the one that you're selling versus the one that you're buying. So we'll go ahead and what 285 was our risk on that. So 1,000. This is going to be the same as the other one, isn't it? 1,000 divided by 285. There's a risk on each trade. Position is 3.5, so we'll do 3 contracts on this one as well. So I'm going to try to get that 215. Put it right there. 215 credit. And, well, maybe go 210, just to be fair, kind of more towards the middle. It'll still be the same amount of contracts. We'll go ahead and confirm and send this one. So we're looking at 630 max gain, 870 max loss. And we'll go ahead and send that one off. It looks like that one filled immediately, like it typically does on paper money, right? So again, we'll highlight right here is where we got in. I want to get it on the area that we got in. And let's also label this one as November 20th. Sold the one. What was it, 170/165? Should put in 3 contracts. 3 contracts. For what did we get on that? 210? 210. Okay. All right, good. Good. All right. Oh boy. Got too much to cover today. With all the market changes, I spent a little more time on the Apple trade than I wanted to, but it's all good. It's important information to understand. But I want to talk about the probability risk profile graph, because this came up again in some of the surveys. Came up and said, "Hey, can you talk more about that?" And really, it is good to understand it. Let's do this. Let's go ahead and I'm going to put in, let's do Citigroup here because I think it's around $100. It was at $100 earlier. And what I want to do is just kind of walk you through just how to read this graph. Okay, I'm going to start off with something very basic like a long call. And so I'm going to just click on this. It's going to give us the trade down here just as a long call. And if I look at the risk profile, what this shows us is, I kind of covered this before, but I want to go into more depth on it. Is down here along the x-axis is the stock price. And so this would say, okay, what would happen if the stock price goes up, or what happens if this goes down? And this would show us the value of the trade. How much would the trade make or lose? And since we bought the 100 call in this situation, this is where max loss occurs, right? If it goes below 100, we hit max loss in that trade. If it's somewhere above that, will we make, will we lose some money up to one? In fact, let's make this real easy. 350. The break even would be 100 and 350, right? Because if it's $3.50 above 100, our strike, there's our break even, and then above that would be profit at expiration, right? And so the blue line is the expiration. The purple line is where it is today. Now, one thing to keep in mind is you want to make sure that up here, that this date is just the day after whatever the option we're looking at is, and it's easy. You just go on the calendar there, click on that, and you'll see the expiration date there. Just click on the next one, because what that is going to do is just change the probability, the range that it should run between. And so the lighter gray is the area that it's expected to move up or down, right? It's not just looking at kind of the volatility, how far does the stock move? So from where it's at now, within that time frame, that's what expected to potentially move. Now, as we get closer to expiration, if I were to bring expiration closer to us, you can see that range narrows, right? Why is it narrow? Because if there's fewer days to expiration, there's a smaller window for it to run. And so obviously it's going to be tighter. And that's what you'll see if you watch this as it gets closer to expiration. Now let me take it back to its expiration. The other thing that's good to do is to grab this, and you can drag this over to say, okay, like right here is expiration, break even. So 103.50 that we talked about. Well, this tells us the probability that Thinkorswim is coming up with, that this is 30% probability of being above this, and 70% probability of being below that, right? And so that's just how you read this chart in general. Now, what I want to do is I want to take this and I want to do something to it. I want to go back to our simulated position, and we had a 100 call. Let's go ahead and sell the 105. And if I sell that 105, just add that to it. In fact, actually, let me do it a little differently. Let me buy this one, and I want to sell that one, keep those separate. So then if I go back to the risk profile, we'll notice what happened. We went from this, where it had unlimited gain, it kept going up and up and up and up. And this is the one we sold. So if I add this to it, notice what happens. Notice what happens to that. Well, it caps it out, right? It capped it out at the 105 that we sold. And so there's the max gain right there. Here's the max loss, and in between here is the range between some gain or some loss. So that's our probability or risk analysis. What is it? The risk profile. Oh my goodness, can't believe I forgot that. But I want to show you one other thing, and I want to teach you this in a future class. Okay, so let's come back here. Let's look at the Analyze tab still. I want to come back here and I want to look at the same one, but instead of looking at the call side, I want to do the same thing with the put, like we were to sell the 105. So I'm going to click on the bid on the 105 and the buy on the 100. So basically creating the same thing. Instead of doing a long call spread, I'm doing a short put spread. So again, here is the long call spread. You saw that. If I put this one together, what do you see? This is the long or the short put spread. Are they not essentially the same? The profiles are the same, aren't they? And so this leads us into another discussion I'm going to have at a later date, which is what is the difference between a long call spread and a short put spread? Some people say, oh, well, one's more directional and whatnot, but gosh, this looks exactly the same. So we'll talk about that in a future class. But for now, understand, this is where you can read the max gain, the max loss, and somewhere in between in there. Last thing I want to show you though is come in on the Thinkorswim or the Trader Talk website. Go over to the shorts. Some of the things I'm talking about in here, I put together in shorts. These are less than 3 minutes. And I talk about all kinds of technical analysis and different things that you can look at in there. So watch some of those shorts that will cover some of the technical aspects that I covered in this class. Last thing I want to leave you with is look at, let's look at MO. MO had a gap down and rally back up. Let's look at this one and keep an eye on that one. Maybe if this, let's see if there's something there. And also Meta, or how about Disney? Let's do Disney. Disney also gap down. I wonder if this one's going to rally back up and come back down. Now, this would be a price pattern called the dead cat bounce, which is what I show in one of those shorts. I explain how that price pattern plays out. So we'll keep an eye on that. Watch for those. We'll talk in 2 weeks, not next week. So please have a happy, wonderful Thanksgiving. Enjoy your time together with friends, family, whoever you meet up with. And we'll keep an eye on these charts. And we'll look forward to discussing what comes of them in 2 weeks. All right. Till then, have a good one.